electoral and policy reform vehicle. But will the goofy Republicans ever listen? And finally, Tiger speaks at a Masters news conference. But my question is, will he make a 12-step meeting tonight? Fasten your seatbelts, everybody. The Cutler Report begins right now.
Fasten your seatbelts, everybody. It all began long ago and ended long ago too.
All right, I made it. Good evening, everyone. I'm Larry Kudlow. Welcome back to the Kudlow Report, where we believe free market capitalism is the best path to prosperity. Let me talk to you tonight a few moments in the Kudlow One-on-One special. I want to look at some of these strong economic growth numbers on jobs and the ISMs. It really shows that the road to recovery is getting stronger, not weaker. The recession is totally over. And frankly, the odds of a real double-dip recession are virtually zero. Now, look, nobody has been more worried than I am about big government tax and spend, regulate, out-of-control Washington. But these policy threats are really next year's news and beyond. And by the way, my Tea Party friend Ryan Hacker is going to be on the program later. He's going to talk about his new Tea Party platform, which I think is terrific and could stop the tax and spend obstacles to future economic growth. But as the Dow marches toward 11,000 in the here and now, one day at a time, you've had blowout ISMs, you've had a very strong jobs report, especially in the crucial area of small business household survey, which is where we are going to begin in a second. Let me just say, you do not have to love Team Obama in order to evaluate these numbers objectively. I say this to my many conservative friends out there and my dear conservative friends on another network who I watched make a complete hash of the job story on Friday night because of their anti-Obama obsession. Now look, I'm here to tell you as an original Reaganite supply scientist who does not like these Washington policies, nonetheless, we can appreciate that the data is coming in positively, and you have to be objective about the numbers, whatever your political prism is. So I say, take off your political lens, put in an objective lens, and what you see is some pretty good news. If we go to the jobs report and take a look at the small business, all right, if I get this right, I haven't been up here in a while, household employment. This is predominantly the smaller owner-operated companies. It is really the heart of the jobs report. It's frankly more important than the payrolls from the big corporations. And it's, by the way, where the unemployment rate starts. Now, again, if I get this right, you can see you've had 3 solid months of household job creation, smaller businesses, 1.1 million in the first quarter alone, averaging 370,000 per month, if I get this right. And actually, it's been up 4 of the past 5 months. Now, if it stays on this track, 370,000 some odd per month, you are going to get a reduction in the unemployment rate. It's that simple. The tax and spend policies are out there. They're going to be threats for 2011 and beyond if they're not repealed. But right now, let's deal with this. In addition to a decent payroll number from the corporation, the big story is the household employment was pretty good. Now, let me just review quickly the 2 ISM reports from the purchasing managers. First of all, we have the manufacturing index. Look at this thing's still up here. That's pretty cool. I didn't even do that myself. It's just here. I guess I should have cleared it. All right, the last few months have been rising. We're well into the 60s. And if that wasn't good enough, the price indexes are strong. And if that's not good enough, the new orders are strong. And if that's not good enough, the inventories are strong. And we're even getting some solid news on employment. All right, let me clear this and go to today's ISM report on the non-manufacturing, okay? This is the so-called services index. And you can see the same trend is rising. We're now into the mid-50s. I believe if I read my Michael Darda today, this is the best we've had in several years, 3, 4, 5, 6 years, going back into the 2000s. Now, this is not all the numbers. I'm not going to make a case that everything is perfect. It's not perfect. But I am going to make a case that the job figures on Good Friday were terrific. much better than expected in terms of the household employment. And these ISM reports I regard as the best real-time indicator. There's a whole bunch of other numbers we could talk about, but I wanted to start that tonight. We're going to get good profits in the first quarter. The Dow is marching towards 11,000. And I would say on the whole, for a great nation like ours, which has suffered in recent years from a terrible recessionary downturn, losing 8.5 million jobs with a 10% unemployment rate, I welcome some good news. You know what, folks? Good profits, ultra easy money from the Fed. A small amount of government spending stimulus didn't have much of an effect at all. Mostly a resilient, durable, mostly free market private enterprise American economy. We will deal with the policy threats in the future. Maybe track from 2011, 2012. Right now, in 2010, let us enjoy it. I want to make one final point. Regarding these ISM, the purchasing managers themselves are suggesting that the ISMs are consistent with 5 to 6% economic growth. 5 to 6% in the remaining quarters of this year. Those are big numbers. Let us enjoy it. America's had a hardship. We are now coming out. All right. If all this wasn't good enough news, pending home sales today came in surprisingly strong for the month of February. CNBC's Diana Olick will give us the full report. Hello, Diana.
Larry, a big surprise on the pending home sales index, which most thought would be flat in February thanks to bad weather, but it was up 8.2%. This is based on contracts signed, not closings. Realtors are calling it a hint at a spring surge. Let's go regional. The pending home sales index month-to-month rose 9% in the Northeast, up nearly 22% in the Midwest, up 9% in the South, but it fell nearly 5% in the West. So is it the start of the spring surge, perhaps helped by the end of the homebuyer tax credit at the end of this month? Could be, but the concern is still about a new wave of foreclosures. In fact, today the administration's short sale program goes into effect. The government will pay homeowners, lenders, and investors to get short sales done quickly. A short sale is when a lender allows the troubled borrower to sell the home for less than the value of the loan. Now, the administration actually upped the incentives just a week ago, really pushing this program as they know that more and more folks are not qualifying for loan modifications. Larry?
All right, Diana, thank you very much. Here now we have Art Hogan, Chief Marketing Analyst at Jefferies & Company, and Matt Miller, Chief Research Officer at WealthX. Hello, gentlemen. Thank you for coming on the set. Let's talk about this. Stocks, commodities, and bond interest rates went up today. Dow plus 46, 10,973, March to 11,000. Do you buy the story that the rebound is getting stronger? Art Hogan, you first.
I do, and I'll tell you why. I think a couple things. It's interesting. I love the fact that you brought up the yield on the bonds right now. And everybody's pointing to that as a detriment to the stock market. But if you look back at the entire decade of the 90s, the average yield in the 10-year was 6.7%. You look at the entire decade of the Rainbow, the average was 4.5%. I think you did a little bit better in the 90s in the stock market. So it's not, you don't have to be in lockstep with the yield.
You know, in the Reagan 80s, I got a 12% mortgage, which was great. And by the way, that was down from about 18%. So the absolute level of what you're saying is the fact that the Treasury bond rate hit 4% is not a surrender sign. It's not. We should not obsess about that.
That's exactly correct. And people are making noise on that front. The other thing I think you should remember is we just worked our way through earnings pre-reported season. Name one company that pre-reported negatively, one household name. There is none. Really, everybody's out there. Even the companies that are coming out and saying, you know what, I'm going to take my write-off for healthcare. Those stocks have gone up as well. You're not hearing bad news. I think the first quarter earnings report season is going to be significantly better. And I think by the time we get out of earnings season,
it's not built in. You think those earnings, we could still have upside surprises. They're not yet totally built in.
Oh, absolutely not. I think that the average estimate, or the consensus estimate for the S&P 500 for 2010 is only $77. It's going to be $82 before we get out of the first quarter.
Which would give you 14 times earnings, 14 more or less,
yeah,
15 and a half. You know what?
I can't stand it. I think the stock market is a casino. I think that we've seen tremendous run-up, and I think that there are stocks to buy. But if you look at the fundamentals, we have a serious problem. We have unemployment that's not at 10%. It's really at 15% if you look at people that are part-time workers and people who have stopped looking for a job. You are going to see money flow out of the bond market to the stock market. That's going to see some artificial rise. We also have a tremendous amount of people that are under a tremendous credit card debt. That's something we don't talk about. Most American families live paycheck to paycheck, and so you're going to see some consumer stocks. If you look at that industry as a whole, that's not going to get driven up as much. All you have to do is see some negative stuff, and then it's going to fall down, and it's going to pull back.
It's so funny. So many of us, look, Small business is the engine of growth and job expansion. I know there are a lot of Washington offices. I do not deny that. I'm just saying that's kind of out there in the future.